Rightio, folks. Hope everyone's doing all right after last night's event. If you did trade the FOMC last night, do let me know what you traded because, apart from Crude, there wasn't really anything that was really doing anything, to be honest. As we can see here, okay, we're seeing a bit of, a bit of pressure. This huge. Look at that. That was the FOMC release right there, and then the presser going forward. We paired back all of that. I have a feeling, it's kind of straightforward, really. If you think about it, for us to go back and test these lows, to be perfectly frank, if we don't, and then fail to make a new high, I'd be remiss to think that this market might actually just slowly edge down and then break this, and might see some capitulation, um, given this dollar can keep above the support level here, right? So as I mentioned in my notes, courtesy of Eddie, showing the FedWatch tool, as this prior high. I mean, it's just yesterday's high. Traded about 105,470s, and this was 99.8% priced in on a 75 basis point hike, which we got from the Fed, which was why we didn't see, this go completely, bazookas to the upside. But what's interesting, as you can see here, that we are getting supported over on this level here. So if we break below, this might mean that traders don't think that the Fed will continue with the 75 basis point hike, which is the it's not really consensus, a bit of a confusion that's going on right now, I feel, in the markets, because Jerome Powell, it's in a way, apart from this 75 basis point hike that we just had yesterday, um, it's pretty much business as usual. So, the next couple of meetings is going to be 50 basis point hike. I mean, they raised the federal Fed funds target, a lot more, mind you, but he's not saying whether or not, they're going to basically quicken the pace on the hikes and, to meet that rate, to meet the terminal rate a lot faster, and all these things. So just basically, we're going to have to see what happens. That's basically what he said. Um, but at the same time, today we will have the Bank of England. And, you can see, like, with my coverage, I don't actually trade the sterling, but we are expecting a 25 basis point hike from the Bank of England today. I mean, it's pretty nasty situation going on over there. Um, if you want to know more, hit us in Discord. It's cheeky. So, like I said, apart from Crude, that was really much of a trade, really. Okay, we've basically traded into the front month contract. The N contract dipped below this prior year high, right? But we still haven't had it over here. Pretty nice lines and sands, if I'm being honest with you. Look at this. I mean, if we do what we have here, this is what you call, I can't remember what the term is now. So basically, when you have like a couple of technical levels lining up, so it should be holding, as you can see here, just very firmly that bid, just buying, coming in on the 112s over here, and it lines up with this basically support trend line. These are daily bars, mind you, so these are the support trend line is decent. If it breaks below, then we might see a test of 110.12s, before, this prior low here. But the biggie level would be around the 106s. If you do get there, I don't know if we're going to get there today, but if we do get there, the faster it happens, the higher the probability of buyers coming in and just buying that, because by that point, I mean, this is a different kind of conversation with how to trade momentum, but yeah, that's pretty much the play here. But until this level breaks, I the long play is still there, regardless of, because we've seen crude base, nothing's changed on the supply side. Okay, so where it's trading right now, I expect it to hold. To be honest with you, um, we might see a lot of resistance, a lot of profit taking on the way up because $120 crude is pretty expensive. So I hope that was useful. Any questions at all, as usual, hit me in the comments. Join us on Discord where Tim is live every day, Mondays to Fridays. Have a good session ahead. This is the Daily Briefing. Cheers.